over a trade that me and another trader took yesterday, Thursday, the 26th of February, um, 2026. And I'm going to start off on the higher time frame, just to sort of give a picture of what I was wanting to see going into the Thursday trading session. Okay. So obviously, as you can see, we have this daily fair value gap. Okay. So all I want to see is if price respects these higher time frame levels. Okay. So ignoring everything this side, I don't really care about all this. All I'm caring about is this candle, and then these, and then this external range. Okay. So we get tagged in on Tuesday, okay, into the internal range, and we don't really move away during Wednesday, okay, so nothing happens. We do sweep Tuesday's low, and in my opinion, when I was going into Thursday, when I marked up the chart on Wednesday night, I thought we could have put the low of the week in, okay. So that was my idea. So I was looking for longs going into Thursday and today, Friday. Okay, so if I drop down now to the 1 hour, you can see the position is already drawn on, because obviously this is the position I took. Okay, so if I start pushing price forward, okay, we put in a low, and then we have Asia session starts to print higher. Okay, so we come into London, and this is the first hour of London. I see my entry model. Okay, so we have the engulfing of both the previous candles, low and high. So the previous candles, low and high, get taken, and we close aggressively to the upside. Okay, so at this point in time, me and my other trader Jake, we were both chatting about what we should do. Obviously, you don't have to target the external range. You could target London higher. I'm pretty sure that was a 2R at this point. Yeah, near enough. So New York AM would have been way over 2R. Okay, but obviously, when we draw on our long or short position, we just take it to the external range, as that's our overall draw. Okay. In this case, I was trying to pass a FTMO account. I think my TP was around about here, near enough 3R, just because that was where I needed to get for the money side of it. But anyways, so at 7 a.m. the UK, so 2 a.m. New York, we have an engulfing candle. Okay, so going into the AM candle, I was looking to take an entry long. Okay, so normally I would take it on the open of the hour, but my other trader Jake had pointed something out from his back testing and from forward testing that the first 5 to 10 minutes of the candle, and this makes a lot of sense. The first 5 to 10 minutes of the candle will normally put in a low or a high, which in this example, we have the new candle open. It opens, it makes a low, and then continues to distribute, and then obviously puts in the high of that candle. So with that in mind, I waited a little bit, missed my entry anyways by about a minute or two as I wasn't on the charts. And then I came back. It was about 4 or 5 minutes past the hour, so about 3:05, and I took entry down here, which was a better entry. Okay, so it's a bit like scaling in just to get better entry. You don't need to do it, but as you become better with the strategy and as you become better at reading charts, you can play with it to get better RR and maybe not have to run your TP as far as you would if you just enter on the hour. Okay, but it is unnecessary. You don't need to do it. Anyways, I'm getting back on track. The next candle opens and tags us straight into the trade. Okay, we run off really, really aggressively. I was floating around about 2% at this point, or about 1.5%. And then you see price just come all the way back. Okay. Now at this point, I sent into Jake and I said that this fair value gap should hold price to go higher. I definitely don't expect these lows or these lows to get ran, just because if that does happen, we could most likely still be in the bearish trend and we continue lower. For me, this was a liquidity raid down here. Okay, if I won't keep this on, but I'll draw it out for the sake of the video. Okay, so we've raided liquidity. Okay, let me just put that. What can I put? Yeah, we can put a sweep. So we sweep liquidity down here, okay? And then we make a nice bullish aggressive move here. We have our engulfing candle here. Now, this is my entry. This is what I'm looking at to see if we can actually move higher. Price does move higher straight off that candle, which is what I wanted to see. This I wasn't so sure about, but I was still happy with the trade if it came into the fair value gap. So stops are below this low because, like I said, if price continues down, it's most likely going to continue down anyways. So you don't really need to be running, your trades down here. And then you're going to see what happened, okay? So price absolutely obliterates down, okay? And it wicks us out, okay? So I got taken out by, what was this? So my stops were at 7,150 and the lowest that went was 7,146. So 4 pips, literally ridiculous. And then price hangs around through the start of New York. Okay, really bad PA. Okay, and then we come towards this 10 a.m. candle. Okay, and now, as I know, just like London, we have the 3 a.m. candle, which normally has the bulk of liquidity during the session, as you see here. We have the same thing happens in New York. The 9 or 10 a.m. candle normally has the biggest move. That's because we have New York Open, we have news around them times, so you always get a nice push. And as you're going to see here, we get an absolute rocket of a candle to the upside. Now, at this point, obviously, I'm out of the trade. I've been wicked out, ridiculously wicked out. And as you'll go on to see, this trade absolutely runs to TP. Okay. Now, it's really unfortunate. The idea was right. The level held. Okay. So the daily level was correct. The entry was perfect. It's just one of them losing trades. But the unfortunate thing with it is we got wicked and then it went. Okay. So sometimes when you're wrong, it kind of feels better if price comes down. And then your overall bias is wrong. But to have the right bias and get done by a few pips is just a killer, to be honest. But looking on the positive, the overall higher time frame drawn liquidity was correct. Okay, so we did have the right idea. We did respect this higher time frame level and continue up and take the external range. And as you can see, the day actually closed back below this. And if we go to the current time, I'm not even sure what it's doing at the moment. Yeah, it's sort of lingering around. Okay, these are not random levels drawn on a chart. Okay, they're not random levels. They're levels that have been back tested. We must have at least 15 years of data between two people, and it's not random. Okay, these levels are where the drawn liquidity is. It's where money's left from high bank orders and from people that have been in the market since obviously last week. Some might say it's even a coincidence that happened to be exactly a week from Thursday. So, but it is what it is at the end of the day. We come in on Monday. We do put in that low of the week on the Thursday in the end. Obviously, I was going in with the mindset that this would be the low of the week. It still put the low of the week in, and then now we created the high of the week. So we had an open, low, high, and then we're probably going to hang around and close here. But for me now, this trade is done. Obviously, there's nothing left for me here, and this will just be a blank chart until potentially we open up a gap today for a potential move to the upside again. Now, these are trades that obviously this is what I'll be doing on Sunday when I'm setting out my charts for the week. Obviously, we don't know how this Friday candle is going to close at this point in time. But let's just say for the video's sake, as if this did close here, obviously I'll be looking for a pullback in on a Monday or a Tuesday to see my entry model in and around this level here, and then to run to this external range. Okay, so it's very simple how we trade. It's very productive, and yeah, it is really what it is at this point. There's not really much we can do. The trade was a good trade, but just didn't. It was one of them ones that stopped us out before it went, unfortunately. Here's an image of the trade when I took it. As you can see, this is the date, February 26th, and I took it at 3:07. So there you go. It's just unfortunate at the end of the day, but nonetheless, it's a good trade to have in the journal and have to have video. So yeah, that's that. On to the next.